Hello and welcome to the Leaders in Cleantech podcast. Each week, our host David Hunt speaks to a leading startup CEO, executive, or thought leader in the cleantech sector. Focused on the clean energy and clean mobility transitions, each guest shares the highs and lows of their cleantech journey, their industry insights, and their vision and hopes for the future.
Hi Ben, it's great to have you join us on the Leaders in Cleantech podcast.
Thanks, David. It's my pleasure to be on.
And good to have you from the COVID sanctuary of New Zealand at the moment. How are things with with you there in isolation?
That's right. I'm feeling quite fortunate to be over this side of the world, surrounded by mountains and space, and moved here just before COVID kicked off, and definitely got a bit lucky there.
Good stuff, good stuff. So lots to talk about in terms of the reason that you're where you are at the moment, not in the UK, and in terms of the internationalization, which I know is your focus on with Habitat. I'm really keen to talk about how Habitat are unlocking the potential for grid scale storage, and there's again lots to talk about there. But it's customary we start a little bit, Ben, of talking about your background. Now, we obviously first met in London way back when, feels like a million years ago, when you were doing some presenting on some markets for Aurora. If you can just give us a little bit of a flavour from how you transferred from McKinsey and Centrica through to becoming a co-founder and entrepreneur of Habitat, that'd be great.
Yeah, sure. I guess renewable energy is the common thread through all of the different roles that I've had that you mentioned. As a consultant, I was quite involved in carbon abatement and climate policy, working different parts of the world and seeing the basic problem from lots of different angles. So that was really where the seed was planted for me. Centrica was a great opportunity to get into a big utility and see how corporate works from the inside and see what impact that kind of organization could have. They were doing a pretty significant program of wind in particular at the time that I was there. And then Aurora was a terrific experience, more of a sort of startup. I was one of the first employees to join Aurora, so saw it through a period of really significant growth, and that was a new experience for me, how to build a business and grow it internationally. But also gave me a ringside seat really for the emergence of distributed and flexible energy, where I was very active. So I was fortunate to work with a lot of the early battery projects in the UK and see what they were up against, what the challenges were, how they were successful, how they built an investment case. And it was all the culmination of those things that was the reason for the founding of Habitat.
I think there's such a fascination and interest on the podcast and with the guests that we have, that combination of the world is moving so fast, or the world in which you live in terms of the flexibility in grid and batteries and the technologies and the policies that support that change on a dynamic basis. But just founding a company is a huge challenge, and all the challenges that brings in terms of bringing people and money and everything into the organization. So it's a really fascinating and challenging time. Before we dig perhaps a little bit into some of those business challenges, perhaps you can just give us a flavour for Habitat and exactly how you engage with the energy transition.
Yeah, sure. So really right from the very early stages of Habitat's founding, we had a very clear service in mind, which was to use algorithmic trading techniques and a human trading team in order to manage and optimize grid scale battery storage. Our view was at the time, this is back in sort of 2017, 2018, that big batteries were just starting to come through in the UK market, but they were mostly focused on ancillary services and particularly frequency response at the time. Yeah. But our view was that merchant trading, just the idea of buying and selling power in any market at any time, was a much more versatile model and one that was going to unlock a much bigger market opportunity and therefore a much bigger impact in terms of renewables integration and the low carbon transition. So therefore one we wanted to accelerate. So that was sort of premise of the company, was that if we could help our clients operate batteries when they were built, but also help them understand the revenue potential and the risk and help them raise money, help them go through that journey to actually get projects built. That was the way we were going to be able to make the biggest impact. And really, actually, it almost surprised how little we've had to deviate from that strategy over the last 4 years. we're really doing now exactly what we set out to do, with a few little challenges along the way for sure, but no major deviation from really that day one strategy.
Well, it's good foresight because, as you say, I say way back when, it's clearly only a few years ago, and it feels like many more. But at the time, the argument with batteries was trying to find the revenue stack, and it would be, say, FR and arbitrage and various other things you try and stack to get to commercialize and invest in a project. But very quickly, that became, as has renewables, I should say, a fairly traditional merchant market, which really has changed the whole dynamic of the industry, hasn't it?
It absolutely has. I find this move to sort of merchant trading, merchant risk exposure, just fascinating, because it sort of touches so many different parts of the energy system and the ecosystem of all the different players. Everything from EPC through to the funders, the insurers, the banks. Everyone is in quite a different situation when there's a merchant project. And it's been one of our frustrations, I think, is just how difficult it's been to get particularly investors who were often used to many years investing in renewable projects on comfortable subsidies. Yeah. I remember one early client came to us and said, no, I'm keen to invest in batteries, but I'd like you to find me a model where I can get comfortably a double-digit return with no risk. Yeah. And I said, well, good luck, but that's not really how the world works. We think the returns are more than sufficient to be commensurate, for the risk. But the reality is, this isn't something that's got a 15-year PPA behind it, or low risk model, and that is forcing traditional investors, the likes of infrastructure funds, pension funds, and others, to ask some pretty difficult questions, even to the point now where some of them, almost to get capital into the parts of the energy system that it's actually needed. Because I think to date we've seen a massive mismatch of too much low risk capital and not enough that was really genuinely open to the merchant side.
Yeah, I guess it was clearly a global issue, but in the UK in particular, clearly we had a period of time in the sort of the early or 2010 through 12-13 where there were so many solar in particular, but renewables projects where there was that subsidy, where it was nailed on money, and obviously there was a bit of as you probably experienced, a crazy gold rush really to get projects delivered, and we installed 13 gigawatts of solar in a very short period of time. But again, it's just getting people's mindset away from subsidy, and the fact that actually there is subsidy is good for certain purposes and clearly did prime the marketplace, but at some point that's just not sustainable. And you have to go back to what we've always done, which is simple business risk analysis,
That's right. But the challenge, I think, though, is not just that the merchant risk is there, but there's something, additionally challenging about battery storage trading in general. Just the idea of buying and selling power sounds simple, but it's really not. And the more you dig into it, the more you realize, how much money can you make with a battery, looking at various different wholesale markets. That's not a trivial question to answer at all. And so I think it's actually the combination of, yes, there's merchant risk, but also this is a business model that's not familiar to even investors with decades of experience, and they need a lot of handholding. They need a lot of support. I think the industry didn't do itself any favors when the early days. I think there were a whole bunch of consultants running around saying, we can simulate how a battery, with a straight face, were saying you'd earn £20,000 per megawatt per year, and others were saying 120, and you had everything in between. And this went on for 1 or 2 years. So these trusted sources of information, where in the past, albeit people would take long-term forecasts with a pinch of salt, but there was still a sort of consensus view that was pretty understood. For batteries, that didn't really exist, and I think it was that as well that really unsettled investors and made them think, we're just not sure yet if we're really ready to dive in with both feet. Sure.
It'd be good to talk about your customers a little bit, because again, I think following on from solar in particular, a lot of people started out by wanting to construct, build, own, and manage the asset, and clearly quite quickly that's flipped, where people are less keen to do that. So, who are your customers, and what are the sort of services broadly that you're providing for them?
Yeah, so I guess our main customers are the owners of grid-scale battery projects, who in turn tend to be funds. So it could be infrastructure funds. So Gresham House is one of our bigger clients. others as well, but they'll typically be just investors looking to make a sensible return by investing in battery storage. Many times they won't necessarily do too much of the hands-on stuff. Different funds will have different flavors where they have expertise maybe closer to the others closer to the markets or whatever else. But our responsibility always is to take physical control of the battery. So we'll actually send dispatch instructions to the battery electronically. We'll provide a route to market, and that means having access to all of the different markets, the different ancillary markets, being licensed and able to trade into those markets ourselves. And then the third part is to actually be able to put those things together and do something. So know when to charge it, when to discharge it, what kind of trades we should be making. Obviously, we're doing a lot of forecasting over a relatively short time period to work out what the best opportunities are going to be. It's putting those things together to basically create a revenue stream that we then pass on to our client minus our fee. That's the basic commercial model.
Right. And in terms of how you have addressed those changes of the market ongoing, and but also going back to the point of founding the business, I don't know how many founders there were initially, but starting to scale the business. Clearly, to some extent, you can say, well, you're not building the assets and therefore expensive, but clearly any business has a need for capital, however you obtain that. And it sounds quite sophisticated, a combination, as you say, of both human and AI support and to enable all of this to happen. What were some of the early challenges from a business perspective of starting to jump into this newish world and provide the sort of services that people were unfamiliar with?
Yeah, gosh, it's a good question. There were many. I think you make a good point, first of all, to say, what resources, capabilities do you need to build a battery trading business? Well, I could make a list, but one thing for sure is that it'll be a different set of skills from what you'd need if you were actually the owner of a battery project or a developer or a funder. Yeah. And I think that's why we were confident enough to believe that as the industry matured, we felt this was going to be a sustainable sort of commercial model, that it would be normal for battery owners to use third parties to operate their batteries. We've actually had a lot of clients come to us and say, yeah, we'll use you temporarily, but our plan is to build this capability in-house. In most cases, we've seen actually, if they're good developers, well, be good at developing, build the right team and the right sort of capital to do that. But then when it comes to operating the battery, that's about data scientists and traders and software and technical skills, which, I mean, sure, anything's possible, but use of the skills and the resources that those battery owners have, our view is not. So far, that's sort of seems to be the way the industry's going. I think that the types of that we went all in on were data science was certainly one. I think understanding the physical battery asset and how it performed was maybe something that made us a little different from our peers in terms of where our focus was. Our view was that if the owners really wanted to think about, owners of batteries wanted to understand the lifetime returns of a battery, then it would be important to think about degradation and how long those battery cells were going to last. And therefore, that had to be factored into the trading model, because it was no good just burning through the battery and honouring the warranty, but and then sort of handing over a bunch of burned out cells in what could be 7 years. If with a slightly softer operating model, maybe you could increase the life by a number of years. Our view was that was important, and the only place in the value chain where that contribution could be made was from the optimizer. So we thought quite hard. We've got a relationship with a battery laboratory out in Oxford University for that. And then there's the trading team, and we are all about data science. We're all about the algorithms. But I think we also recognize that this isn't something, at least for the foreseeable future, that we think will be 100% automated. Certainly not in a market like the UK, where there's just so much sort of quirkiness, if you like, in terms of the prices, the opportunities that you see. When one of your major trading counterparties, National Grid, is themselves not fully automated, there's always going to be a place for human relationships, picking up the phone, seeing unprecedented events and interpreting them with all of the wisdom of a human trading team. So I guess that was the third leg to what we wanted to build.
Right. You touched on something there that was interesting. You're having the hub or the part looking at the capabilities of batteries. clearly still lithium-ion broadly dominates the market at the moment, but we're seeing increasingly some innovative technologies in and around lithium itself, and we saw obviously Form breaking cover a little bit this week with their technology. We've worked with a number of companies involved in sort of various sort of variations of chemistry around lithium ion. And then of course when we look at longer duration, there's a number of whole different sort of thermal technologies, flow batteries and technologies coming through. Are you technology agnostic? Are you keeping an eye on where you might be able to provide services to developers of those different types of assets?
We certainly are technology agnostic. We're happy to work with any battery type, any chemistry, any manufacturer. And increasingly, actually, as we're seeing a little bit of across the market, that's starting to become a more valuable commodity, with the likes of Tesla obviously having their own auto bidder and BMS. A lot of our clients, because we're not tied to any particular tech, something that we're keen to maintain. We have looked at other types of storage, and from our side, the challenges are very similar. I think as you move to longer duration storage, thinking about a longer forecasting horizon, but certainly we've got the technology that's quite. I think I, like everybody else in the market, is hugely excited about the prospect of new technologies coming forward that can bring the price down for one thing, but also make longer duration storage an investable prospect. I do think, though, actually, that long duration storage is, as much as it is clearly going to be very important, is often a little bit misunderstood. The challenge with the long duration storage is, if you think about the sort of basic trading storage makes money, it's how many cycles per day are you charging and discharging the battery, or per week or per year, times what's the spread, what's the difference in the price between where you buy the power and where you sell it. If you've got long duration storage, naturally, almost by definition, the number of the cycle rate is going to be a lot lower. And the reality is, in the market, you don't see significant improvements in spread, even if you're looking over a longer time period than a day. Right. So the only way that long duration storage can work is for it to become very, very cheap. And in my mind, that's actually what long duration storage is. It's not really about being a different technology. It's about being a storage technology that is very, very cheap and therefore can be economically used for long duration applications. Right now, you've got flow batteries, you've got pumped hydro, you've got these new emerging technologies. But when you look at them on a per megawatt basis, rather than a per megawatt hour basis of capital cost, they've still got a way to go. So, I hope they get there, and I hope we see some projects come forward. But it is very challenging to beat that sort of facet of the market, that a lot of the money does accrue to the first 1-2 hours of battery duration, and after that, it's rapidly diminishing marginal.
Yeah, I think that's one of the struggles with the longer duration. So what is long duration, 4, 6, 8, 10, 12, it's interseasonal, or at some point then it is different. But then I say the business model that to make that a commercially viable project, I think, is still being found out, I think. One thing which is interesting, because clearly starting in the UK, and we've had a deregulated energy market for some time. We had that solar boom. There's a lot of capital, of course, in London and the UK. So I guess there was not an easy market, but there was a lot for which you learned and from which you built. But clearly the energy transition is a global thing. You're no longer in the UK. What's the sort of internationalization, and how have you found other markets, and has it changed either your model or how you approach different markets?
We feel sort of fortunate with the timing. When we entered the UK market, we had pretty much 2 years to focus really on the R&D to build the technology and build the platform before we started operating large-scale assets. And when we'd done that, we sort of stepped back and thought, well, to what extent is this platform that we've built scalable to other international markets? And it's clear that it's not 100% scalable. There's always going to be things specific to local markets and how they're designed, how you interact with them, that mean you need to do some customization. But we also felt a lot of the AI frameworks and tools, a lot of the forecasting that we got very good at, all of the sort of cloud hosting infrastructure and other sort of IT elements, plus, of course, all of the understanding of the physical battery itself. That was more or less transferable. And we saw that as battery prices were coming down, it was opening up more and more markets for batteries to become investable. So we wanted to jump on that opportunity. We decided on Australia as a market that was sort of accessible and growing quickly, and ticked a few other boxes for us. So that was the reason for me moving to this part of the world, was to help support the launch of our Australian business.
Yeah.
We've hired a really terrific team in Australia. We've got first batteries signed up, and we're actually on the countdown now to going operational in that market just later this year, starting for the whole team. It is a very different market there. It's fascinating. In fact, it's a 5-minute market as opposed to 30 minutes in the UK. Ancillary service markets are traded in real time. The generation mix is completely different. The political environment's completely different. But we love that. It's fascinating to see some things in common, but some things different. We're also launching in the US at the moment, and we've been really fortunate to partner with a group called Quinbrook Infrastructure Partners, who have assets in the US and have been keen to build a relationship with us and actually help us launch initially in ERCOT, so in Texas in the US. So we'll be making further announcements about that later in the year. We're looking at other markets as well, Japan, Ireland. Who knows? It's all happening so quickly, as you say. It's just a matter of how fast can you grow and scale and keep the show on the road.
Yeah. But so that regulatory environment is I guess critical to some extent. And looking at the US, clearly, as we all know, it's that there, you've got three main energy systems there, ERCOT of which being one, but lots of different interstate policies and challenges and difficulties. And clearly, we've seen in California and Texas in the last couple of years some real challenges with keeping the lights on. So clearly, I guess that's a good place to be starting with the development of assets, storage assets there.
Yeah. Absolutely. I think battery storage as a technology has been fortunate that it's got relatively few enemies. I think, no matter what your view is on sort of priorities for the energy system, storage is a winner on just about any basis. And that's great. But, the challenges are certainly market specific, as are the investment models and the players. So we're not getting ahead of ourselves. I think we're very aware of the challenge of entering, particularly the US, which is a more mature market, which is why I think that the partnership for us was so important. But it's a huge market. It's growing at just an eye-watering rate. And our view is a number of players like us to be coming at the problem from different angles and all contributing through their different approaches, different strategies, different skills to decarbonising the energy system. And I think if you believe in that as the end goal rather than commercial success as the primary view, then it's maybe gives you a little bit more confidence to dive in and try and bring something new.
Yeah, no, absolutely. I think that's one of the interesting things is most entrepreneurs in this space and that we speak to are clearly financially biased, but mission led. I think that element of just be excellent at what you do and the money will follow. Having that as a view is I think is important for success. But that does notwithstanding, there are challenges in internationalization, many of which we touched on there in terms of regulation and policies, in terms of actually physically setting up a company, having set up companies in the US and in Germany in the recent years. There are challenges in just creating legal entities and all that comes in hiring people and everything that comes with that. So, how much of I guess obviously there's a strong leadership team, but how much of involvement or enjoyment do you get from some of those internal operational challenges rather than the customers' challenges?
Well, I'm not going to pretend that I've enjoyed every aspect of running a startup. I don't think any of my would say that either. I think it's the reality when you start a business, as you know yourself, David. I'm sure there's a lot of work that has to get done, and a lot of it is not glamorous. But you've got limited resources and limited time, and you just kind of got to get on with it. There's been a lot of that off and on, but I'd say there's also been some moments of real pride and real satisfaction and achievement. I think bringing a team together is. On the one hand, it's daunting and it's a bit humbling. I think the moment you decide, right, we're going to start this new part of the business, or we're going to build this team, we're going to hire some people, you realize that you're ultimately holding people's careers in your hand at that point, and that's a real responsibility that we take very, very seriously. The exciting part, though, is when it does come together and you see what that team's then capable of doing, and you see the team build and get momentum. Co-founder, ideally you can start to step out of some of those day-to-day things and let the team do what they're there to do, what they're specialized in, and frankly at doing. That's the really exciting bit. So I think that's why I enjoy my particular role. We've, as co-founders, the three of us never had sort of formal responsibilities, but I think it's fair to say I've sort of gravitated towards building the client relationships, thinking about the international growth, and I've found that extremely stimulating and been a terrific experience.
Have you managed that again during the last couple of years, as we have? I think I've been on one international trip in the best part of 2 years to see a client. It's been challenging. Of course, we know how much can be done online, but equally,
Right.
particularly when you're building partnerships and talking about substantial potential revenues and/or capital investment, it's still a little bit daunting to make that commitment without some form of physical interaction and shaking of hands and all that comes with that. So how has I guess the last couple of years of being across the other side of the world and unable to travel, but still expanding both in Australia and of course now looking at the US?
Yeah, it's certainly been a shock for. When I moved to this part of the world, I was thinking, well, we'll be launching in Australia, we'll be in Sydney, Melbourne. New Zealand's not so far away, so I can be commuting as needed between those different cities. And certainly when I hired my senior counterpart in Australia, Greg, who's based in Melbourne, I said, oh, don't worry, I'll be right alongside, I'll be over all the time and we'll work closely. And then a couple of months later, that turned out not to be possible. So yeah, it's obviously been tough. I enjoy being in a room with people and getting that extra dimension of just reading the body language and all the things that are harder to do remotely, and going for the drink afterwards and all of that. Of course, we all miss. The huge upside, I guess, was that people realized if we were going to push on and continue with our businesses, we had to just make do with video conferencing, and it turns out it works pretty well. And if anything, I think I've been finding it easier almost to work from here. I can work now across multiple time zones. I don't lose any time to travel. It actually works pretty well. Still looking forward to getting back to a little bit more human contact when that's possible, but for now it certainly hasn't held us back too badly.
Yeah, super. In terms of the future, clearly, we're in a nascent market still with batteries, and clearly as a young company still, notwithstanding that you've now sort of internationalized and got a big opportunity ahead in the US. But what are the longer term plans for the organization like Habitat? You've learned an awful lot and developed an awful lot of proprietary, not just software, but knowledge within the team, as you say. I mean, what's the future? Is it just more further internationalization, or do you see other areas of being able to bring your expertise to bear in other parts of the energy transition?
I think the main priority for us beyond battery storage and the current sort of focus that we have is to get more into the co-located storage with renewables, but particularly I think we see that as a huge opportunity globally, and where a lot of the same issues are prevalent now that were the case for storage only a couple of years ago, which is building the investment case, getting the investor confidence that this is a bankable technology, that the returns are really there. Understanding some of the really technical details, like how should the metering be arranged if you're DC coupled versus AC coupled, and just stuff that the industry's never really had to solve before. But now we're suddenly doing it at vast scale with multi-100 megawatt projects. So I think there's a lot of progress the industry needs to make, but we as optimizers also do. So we're very excited about that. There are a long list of peripheral opportunities that we could get into, from other types of distributed assets, behind the meter, EV charging, smaller scale C&I. We get approached about those things frequently, but I think our decision to date, at least, has always been, we're a small company with limited resource. We need to stay focused on one thing and do that one thing extremely well, and not get too distracted. So that's served us well, and I think certainly for the time being, I think that's how we'll aim to continue. We recognise we're up against some pretty formidable competition, and I think as the market matures, there'll be consolidation, and there'll be vertical integration, and there'll be new commercial models and new challenges. I guess that's one thing we keep an eye on, is particularly on the dimension of balance sheet. I think if the industry goes down the track of expecting the optimizer to provide extensive revenue guarantees and sort of structured risk products where you need a balance sheet to be able to be the counterparty to those, we may struggle as an independent company. If it goes the other way and it's all about the money, people just want the best technology that can deliver the best revenue, and then they just want an agile and flexible company such as ours. We may well be independent for many years to come, but that's certainly something we continue to think hard about.
Yeah, no, that's one of those challenges. You obviously know the guys at Lime Jump, and Eric is a client and also a former podcast guest who, and obviously they're to Shell for obvious reasons that work for them. So like you say, it's how long do you continue to play all that thorough, and when do you need to make further collaboration? One thing you touched on there briefly, and I think it is interesting that it is tempting us, an entrepreneur, when there are so many opportunities, both in terms of periphery markets, to sometimes lose that focus. And it's great to hear that you've been fairly laser focused and obviously capitalized on that. I would like to get your thoughts, because I'm fairly sure that the time that we met in London, the talk was in and around what was even more nascent at that time was electric vehicles and how they would roll out. So clearly at the moment that's an exponential growth curve. It's still, I say, nascent, but there's a lot of talk of how and when and if electric vehicles can play their part in storage and obviously balancing of balancing grids, etc. Particularly for large fleet uses, these typical stuff, buses all plugged in overnight, that kind of stuff. I mean, do you see that as a viable market in the coming years? Is that somewhere where potentially you can bring value to those owners of mobile storage assets?
It's a good question. I think our view generally is, as a company, we are cautious to get involved in any opportunity that's too finely distributed, if you like. If it's lots and lots of very small flexible assets, just purely commercially for us, it's not a technological challenge, but it's just a commercial challenge. The economics of a large fleet of EVs or a large set of C&I opportunities is difficult when a lot of our costs are fixed. Just the contracting, the onboarding, all of those have a sort of fixed cost component to them. So for us, we haven't looked closely at that. I think if we had the opportunity to optimize a fleet that was already aggregated, that might be a different story. I do think EV, sort of vehicle to grid technology, has got a lot of potential. But I also don't see it as a direct threat to dedicated grid scale storage. Mm-hmm. A battery as a capital asset where you pay all the money up front and then it's something you can just use for free. It would be logical to say, well, we've got all these batteries as part of electric vehicles that are sitting there doing nothing, let's just use them. But actually, that's not how the economics of batteries work. It's more like you pay for the battery as you use it, as you're degrading it continuously over its lifetime, and you just have to prepay for all of that degradation up front. But when you think about it with that model in mind, you suddenly realize, well, EV batteries are probably going to be a lot more expensive per megawatt hour than grid batteries are. Yeah. And they're already in a car, which has been bought to be a form of transport, not to be serving the grid. So it's not to say it's impossible, but I think it makes EV, vehicle to grid, more suitable for availability type models. Yep. Or you're doing some ancillary services with minimum throughput. But for the heavy lifting of renewable integration, I think especially as grid scale projects get cheaper and cheaper, we'll see. I think they'll continue to be the winner.
Yeah, no, it makes sense. Cool. Well, listen, it's been great to spend some time with you. And in terms of then, I guess that you've talked a little bit about the future of Habitat and some of your further expansion plans. It's good also to conclude by looking back at the past, because we touched on a sort of an interesting and varied career. What, if anything, have been sort of inspirations along the way, either books, thought leaders, individuals, or places inspired you on this clean technology entrepreneurial journey, or places that you go to, because we all have dark days in this game. So perhaps if there are places that you, I guess, jump back to when you find the going a bit tough.
Yeah, I think I would say I never saw myself as an entrepreneur. I spent the first part of my career in, frankly, a pretty traditional kind of corporate track, and figured that's where I'd career. It was just serendipity to some extent that I got sort of closer and closer to seeing what entrepreneurial pursuit looked, and then at some point decided to sort of natural personality type necessarily to want to take big risk or take on challenge like that just for the thrill of the ride. But I think what's made it work for me, and the reason I actually now love what I'm doing, and I'm really glad that I've gone down this path, is recognizing what your strengths are, but also being aware what your weaknesses are, and complementing those by finding the right people to join you in the endeavor. Yeah. I would never have started a business completely on as I said earlier, that co-founded Habitat at the same complementary skill sets, which is great. But I think in terms of how you deal with those dark times, fortunately for us, I think we've probably all been on those ups and downs on slightly uncorrelated wavelengths, which is great, because someone will be having a bad day or a bad month, or something's gone wrong in the business that particularly impacts one person's responsibilities, and that person's feeling. You go to the pub or you give them a call and you say, chin up, lots of other things are going great. And I think just feeling that sense of a team and camaraderie has been really, certainly always recommend that. Anyone who asks me about whether they should start a business is just, make sure you've got the skill set covered, but also are you really up for doing it alone versus bringing some others alongside. I think it's a great way to do it.
Yeah, thank you for sharing that. And again, I agree. Obviously, clearly, you'd expect us to be as headhunters, focused on the people side of things, but having that balance within the team of both skills but also personalities, and have the complementary sets, that really helps when, I should say, the going will get tough. And having that, and also company culture, the more broader company culture that the team can support you through and motivate you when, as a leader, you'd like to some days even give up maybe, but having that family as such that you're responsible for, and also sort of motivating you to push through. So I think I should say that the founding team or the management team that you create is interesting. We go on a long time about that, but listen, I really appreciate you sharing your thoughts. I'm going to let you go because I know that it's at the end of your day as much as the beginning of mine, and look forward to seeing what's activities in Australia, and of course, more importantly, the new ventures, and we'll keep our ears to the ground in terms of the expansion into the US. But thanks for sharing your story.
Thanks very much, David. It's been my pleasure.